Stocks extending those declines today amid escalating trade tensions. President Donald Trump's 25% tariffs on Canada and Mexico. Also, that additional 10% tariff on China, all taking effect today. Risk-wary investors avoiding these market pullbacks amid heightened uncertainty. For more on this, we've got Andy Reid, the head of investor behavior research over at Vanguard. Andy, we were just speaking with our last guest about how quickly investor sentiment is moving in this policy uncertainty environment. What are you hearing from investors about the degree of pessimism right now?
Yeah, I would say, if the theme of 2024 was steady optimism, 2025 is really shaping up to be one of really rising anxiety. So we've been tracking investor sentiment over the last 8 years with a bi-monthly survey. So every other month, we ask about 2,000 investors to predict returns in the market, to predict GDP growth and inflation expectations. And in the last few months, we've really seen a sharp downturn in sort of pessimistic outlooks compared to what we saw for all of last year. And so really, it's a story of investors being on edge. So they haven't lost their nerve completely, but they seem to be a lot more anxious than they were for all of 2024.
Is it likely to be a bumpy ride for the weeks and months to come?
It's tough to say. I would say sentiment is quite fluid, right? It changes with mood, it changes with, front page news, with tweets, et cetera. The good news, though, is that portfolios are fairly robust. And so the relationship between changes in sentiment and changes in portfolios among at least Vanguard investors is not quite as strong as you would expect. So portfolios, in other words, are showing a lot of resilience in the face of changing expectations. So despite what you might expect, even though investors are becoming a bit more pessimistic in their outlook about the market, the economy, and inflation, their portfolios are largely staying the course. So, this notion of, everybody's panic selling, what we see in the data is that investors are not only much more likely to be buying the dip versus selling during choppy market movements, but by far the most common course of action is to simply stay the course. So on any given day, we're observing somewhere between 97 and 98% of Vanguard investors not making any changes to their portfolio.
That's interesting. So I was thinking before you said that about is sentiment going to catch up with the market? Is the pessimistic sentiment that we're seeing going to catch up to where the market's at, or is the market going to crash down to sentiment? It sounds like you're not seeing a reallocation that would indicate that.
No, we're certainly not. And I would say historically, what's fascinating about the patterns in our data is that the market seems to drive sentiment more than vice versa, which is to say, when we look at changes in sentiment over time, so if we look back to 2022 or 2020, for example, the market moved first and then sentiment changed in reaction to the market. What's different this time around is that the market was hitting its all-time high in roughly mid-February, and at the same time, investor sentiment was moving in the opposite direction. So sentiment was kind of moving ahead of the market, and I think what we've seen in the last few days is not necessarily unexpected, given that investors seem to be bracing for bad news and not simply reacting to it.
All right, we got to leave it there, Andy. Thanks so much for joining us. We appreciate it.